Well, welcome everybody. We are in this webinar with Dee. She will introduce herself very soon. Welcome to the webinar, 3 errors that make traders lose 76% of the time. Thanks everybody for joining the webinar. I'm Alejandra. I'm the marketing manager of South Africa and other parts of INFINOX. I'm going to explain you a little bit of what INFINOX is. INFINOX born in the year 2009. We are a broker of Forex and CFDs on indices, commodities, shares, and futures. We have presence in more than 15 countries around the world. Our business focus on the transparency and the relationship with the clients, apart from offering a very good competitive prices. We are a STP broker, and where during the webinar, this is going to explain a little bit of you, a little bit more about INFINOX, the broker, and how to avoid lose capital when you are doing trading. We have here also Tiago Cardoso. He's the head of Ike Social. Ike Social is one of our star products. So we recommend to all of you guys to download this app. Ike Social has the yellow logo. If you go to App Store or Google Play, it's our social trading app. In there you can follow the most reputable strategies providers in the world. You can copy their trades and win without having to stay that much doing trading, because you're following them. No? So, well, Tiago, if you can explain a little bit more about the Ike Social, just top level points, and then we can give the word to Dee, so she can introduce herself a little bit more, and she can start explaining to you the top level points and all the webinar around the topic. And I hope, guys, you enjoy this webinar.
Sure. So Ike Social is an app that INFINOX developed in order to empower our clients, mainly the clients that are in South Africa, to easily access the financial markets, to easily access strategies, and where they can, where you guys can copy a suite of strategies for free. One of those strategies, precisely this strategy. She's going to speak a little bit more about that also. But I can tell you that it has been a great experience. Clients have been very happy using Ike Social. It is an easier way to gain access to the financial markets nowadays. When we want to start trading on the financial markets, we face 2 big issues. The first one is I don't have time to dedicate to understand or to analyze the financial markets or even to trade myself. And the other big issue is that I don't have knowledge. I still need to learn. I still need to understand how markets work. So this has been slowing down the adoption of Forex, of any other kind of trading in a region, for example, like Africa. But with Ike Social, we try to sort this problem. We try to empower you guys with an app where you can easily access the financial markets or these amazing strategies that we have by just one click, by just downloading the app, by just selecting the strategy that you want, by clicking the copy button, and be able to automatically 24/7 be able to copy the trades of your selected strategy providers for free. So it is just a matter of you guys also downloading the app. So if you go on the App Store or on your Android store, which is called Play Store, if you search for Ike Social, you will be able to find our app. It is a yellow logo. Very easy to install, very easy to create a profile. It ends up being like a social media network, and you guys can interact with each other. You guys can join groups. You guys can copy the strategies. You can interact with the strategy providers. For example, you can interact with Dee on the app. You can comment on her trades. And I believe it's going to be a very, very big value proposition for you. And I believe you guys are going to end up learning a lot about the financial markets. Dee, do you want to start? Are you ready?
Yep, that sounds absolutely fine. Thank you, Tiago.
Good luck then. See you later.
All right, thank you. Hello. As the presenters have said, my name is Dee, and I'm a strategy provider here at INFINOX. And first off, I'd like us to get to know each other a little bit. So I have actually written on this slide to type yes or no, but I notice on Zoom there is a lovely raise your hand facility. So you'll see that at the bottom of your screen. If you could raise your hand to let me know if you've traded before. Okay. And how many of you would classify yourselves as beginners, people who don't really know too much about the markets, but you are looking to get more information? Okay. And then can you raise your hands if you would classify yourself as a very experienced trader, you know, a couple of years worth of experience trading the markets and familiar with risk management and so on and so forth? That's wonderful. Thank you very much. Okay, so I'm going to give the presentation now and then answer any questions you may have at the end. I'd ideally like to leave 20 minutes for you to leave any questions and answers. Can you bear with me just one moment? There's a little background noise. Sorry about that. Okay, so the first thing is I'd like to give you a little bit of information about me. I've got 30 years of experience working here in the City of London, which is the financial district, serving professional investors and traders from investment banks, asset management companies, and hedge funds. In 2000, I stopped working for the big banks and focused instead on smaller companies who provided services to the individual trader like yourselves. I now trade for myself and occasionally work for companies that serve the individual trader, such as INFINOX, and design investor strategies. So what do? Well, my strategy is a trend following strategy, and it basically tries to capture profits from global trends in a diversified portfolio. As you can see from the chart in the slide that I'm showing you now, there's a variety of arrows, and I have built a custom indicator, and I'll go into that a little bit later, that tells me when there are opportunities to buy and when there are opportunities to sell. I trade the major foreign exchange pairs. That's the pound, euro, Aussie dollar, New Zealand dollar, Canadian dollar, Swiss franc, and Japanese yen versus the US dollar, gold, oil, and NASDAQ 100 equity index. And I'm happy to answer any more questions if people have it. So what are the three errors that traders classically make? And the first one is that they have no strategy. They don't know when to trade. They don't have a recipe for success. Secondly, there's no risk management. So if you don't manage your trades, then who will? And the answer is the market will, and you won't get the result you want. And lastly, traders have inflated expectations about what they're going to make. Now, trading isn't about making massive trades and winning life-changing sums of money. It's about applying a process with discipline every day and accumulating wealth over time. Now, I often get asked, how long will it take me to become a consistently profitable trader? Well, the answer is 10,000 hours. Seems quite daunting, doesn't it? This information was established through academic research and was the basis of a book called Outliers, The Story of Success by Malcolm Gladwell. And it was discovered that, you know, in order for a person to acquire a new skill and to be able to apply it competently, it requires 10,000 hours of, you know, reading and practice. So the takeaway from this slide is don't be put off. I know 10,000 hours sounds like a lot, but don't expect to be great in the first 10 hours or the first 50 hours of your trading career. Second, put in the time, practice, and you will eventually get it and make profits from your skill. Lastly, it's a marathon, not a sprint. But the great thing is that as part of the INFINOX family, you're not here on your own. There's the collective knowledge and experience of trading to date. There's the deep resources of INFINOX. They provide analysis and other tools on the website. And then there's traders like me who want to serve you. We are in the age of information, and the internet is a fantastic resource for information and learning. Now, the aim of this presentation is to help you focus on the skills you need to master in order to become a consistently successful trader. I hope that it will save you time, energy, and hopefully set you on a better path to success. So the first thing I'm going to tell you is about a trading experiment. It's called the turtle trading experiment. If you go onto the internet and do a Google search for turtle trading, you'll find there's quite a lot of information. And basically in 1983, two famous commodity traders had a discussion. They wanted to find out, they wanted to know if great traders were born with the skills or whether those skills, those trading skills, could be taught. So they devised a trend following strategy with risk management rules and taught it in 2 weeks to complete beginners known as turtles. I mean, they literally took these people off the streets, gave them a short interview, gave them the set of rules and some money and said, off you go and trade. Now, the rules included things like don't let emotions fluctuate with the up and down of your capital, judge yourself not by the outcome, but by your process, and so on and so forth. After time, each one of these turtles became multimillionaires. And what it means is that this experiment demonstrated the importance of a strategy to become a successful trader. It shows that you can take a complete beginner, give them a set of rules to follow, a strategy or a recipe if you like, and they can succeed in trading. Good traders are not born, they learn to be good traders. So the strategy, your strategy, is your edge, and it makes your trading decisions better than flipping a coin and improves your odds of winning. So what is a strategy? Well, it defines everything about what you trade. Which assets? Is it going to be foreign exchange, indices, gold, oil, shares? When do you trade? Which time of day? And which time period do you use on your chart? Is it going to be daily, weekly, or hourly? And also, how do you trade? When do you buy and sell? When do you take your profits or close at a loss? How do you protect your account from a big loss? And if your trade is profitable, do you add to it? And how much should you put into each trade? So one advantage of a strategy is that it helps you avoid the expensive mistakes that beginners often make. We all make mistakes, but it's hard to recover from a big mistake. Positions or trades that are too large and risky will control your emotions, and you'll become attached to them and make bad trading decisions. A strategy is like a recipe, and if you don't follow the method, use the right ingredients, you won't get the right results. Practice does make perfect. We all know this. Develop your skill. Become an expert over time. Now, it all may sound pretty daunting thus far, but don't worry, because there are hundreds, if not thousands, of well-known time-tested strategies out there. For example, great beginner strategies, including moving average crossover, breakouts, pin bars. And what I'd like to do now, and you can see that there's a list on the screen there, but I'm going to take a look at a few of these trades or these strategies now. So this is an example of a moving average crossover. And in this chart, there are 3 moving averages: the 7-period simple moving average, the 14-period simple moving average, and the 21-period simple moving average. And then basically when the moving averages all cross, in this case this is a down cross, you'd enter into a sell, and then you close out here when all the 3 moving averages begin to rise again. So that's a crossover strategy. A breakout strategy looks at areas of resistance or support. In this case, it's resistance. So the price has come up a number of times and tried to break through this level and failed. But eventually here, it does break through. And so what a breakout strategy would advise is that you place a buy trade just above this line so that you can take advantage of any breakout higher. Another strategy is that of pattern recognition. This is quite a busy slide, and there are a very big number of patterns available, but they are pretty much symmetric. So as you can see, this pattern here is the famous head and shoulders pattern, where a break of this, the neckline, leads to further declines. But then there's the inverse here, where you've got an area of resistance. Price comes up, tests it again, and then you get the breakout on the 3rd try. So you only have to remember half as many of these patterns. Patterns come in 2 flavors. Continuations, which indicate that the prior trend is going to continue. So downtrend, continuation pattern, the trend continues, and also reversal patterns, which are typically seen when a trend reverses direction. Pin bars, that's a very popular strategy. A pin bar is formed on candlesticks from the open, the close, the high, and the low here. So you can see that this bullish pin bar has got a very long tail. And how that's formed is that prices opened here, maybe they ran up to the high, or pushed all the way down to the low here, but then buyers came in, knowing that it was too cheap, and pushed, the prices all the way up to the close. Now, the only trouble is that when you can identify things like pin bars, you do see them everywhere. But as you can see, they work very well in identifying levels that have been rejected or rather reinforced as areas of support. So this is an uptrend, and these pin bars would have provided buying opportunities. Now, MT4 is the world's favorite trading platform, and there's a good reason for that. I mean, there's tons of online guides, there are fantastic YouTube videos, there's a lot of support, and even INFINOX provides its own support as well for the platform. But perhaps best of all for you guys, there's a lot of free stuff, tools to help you run a strategy, to alert you to trading opportunities, so that you don't have to constantly watch charts, that you can let the computer do some of the work for you to identify opportunities for your trading strategy. And like the indicator that I programmed, you can have pop-up alerts with sounds or maybe little messages. And some of these tools that are provided can help you place and even manage your trades. Now, for those of you who are interested, if you connect with me on IX Social, I'm happy to share some of the better resources available on the internet to you. Unfortunately, some of the free resources available on the internet are very good, but an awful lot of it is very bad. And for beginners and people who are relatively new to this platform, it's difficult to know which is which. So I'm quite happy to share that information with you. So the next thing about trading is time. I mean, some of you may already have careers, you know, where you're working full time, or maybe you're working part time, or maybe you have an awful lot of free time. But everyone has different time constraints on them for trading. And one of the questions is always, well, which strategy is right for me? Now, we know there's loads of strategies, but the one that's going to work best for you depends on when you can trade. I mean, maybe it's when you come home after work, how much capital you have. The more capital or money that you can deposit into your account, the more you can diversify. And also your level of experience, because the more confident you are, the faster you can get going. But looking at time, we can see. So I'm going to look at time now. So this is a chart showing the price of oil. So this is West Texas Intermediate over time. This is a 20-year chart. So you can see 2000 here and 2020. And you can see, you know, that, you know, even if you traded on a monthly or quarterly basis, you could have ridden this trend all the way up to the high of 147. Then we had the global financial crisis, slow and unsteady recovery, and then basically this decline here, followed by this decline, was the fact that the US became a net exporter for the first time in its history of oil, and there was more oil sloshing around in the world than people knew what to do with. But you can see that, you know, on this chart, although it's a very, very long dated chart, that trends exist, and therefore you can follow them with your strategy. Now, trading an oil contract requires a lot of margin. So you might want to trade this pair, which is the Canadian dollar versus the Japanese yen. Now, why would you want to do that? Well, Canada is the world's largest exporter of oil, and Japan is the largest importer of oil. So therefore, the Canadian dollar, Japanese yen foreign exchange rate does tend to respond to oil prices. Now, that's not probably abundantly clear. We're looking at a chart here that's from 2002 to 2016. You can see that decline that we saw in the previous chart associated with the global financial crisis and then the unsteady recovery. But perhaps this chart, although it looks a tiny bit messy, shows the relationship between oil, which is this turquoise line, and then the green and red candlesticks are showing the price of the Canadian dollar versus Japanese yen foreign exchange rate. And you can see that they actually do follow each other pretty well. So there's all these wonderful relationships in the financial markets that can be used to create a strategy. Now, if we look at oil with two moving averages, a 25-period moving average and a 15-period moving average, now we're looking at a much shorter time frame here. This is 2021, and this is an hourly chart. No, it's not an hourly chart. It's a 4-hour chart. I do beg your pardon. But you can see again that trends exist. So, you know, if you can only trade, well, if you have the time to trade and you can spend a couple of hours staring at the screen, then, you know, a shorter time frame is maybe better for you. But in this case, this two moving average strategy identified a buy here, which was around about 55.50, and then you would have come out somewhere around here, which is what, $65. So that's a pretty good rate of return, $10 on $55. So that's nearly 25%. No, sorry, nearly 20%. And then if we get really silly, this is a crude oil chart and it's 1 minute. So this is for people who've got very little time to trade. But again, you can see that trends exist, even on very, very short time frames. So whatever time you've got available, there is a time frame to suit you. And your strategy can be applied in that time frame. I mean, even if we look here, we can see various, there's a pin bar there, for example, doji. There's all sorts of patterns going on in here. So the takeaway is that whatever you have available as time and capital, there's a strategy for you. Now, at the moment, I want you to think about, imagine if you could play a game for 15 minutes or 5 hours or 5 days and make a second income, grow your savings, improve your life. Well, that game is your strategy. So that's why strategies are important. So the second error is risk management. Risk management is essentially your survival strategy. It prevents you from suffering large losses and it keeps you in the game so that you can continue to trade. Now, there are two forces in trading. One is risk and the other is return. In general, the bigger the risk you take, the bigger the return you expect. Unfortunately, risk is symmetric. Good risk leads to profits and bad risk to losses. Now, it's a fact that the return or profit you're going to make from a trade is not known when you make your trade. The trade that you make at any one point in time can be profitable or it can be a loss. Return is unknowable or unpredictable. Your strategy should give you a higher chance of winning, but like flipping a coin, you can get 2 or more losses in a row. The risk of a trade, however, can be controlled by using your position size, stop losses, and targets. So the takeaway here is, if you cannot control return, if when you roll the dice, if when you place your trade, you don't know what sort of profits you're going to get, it pays to manage your risk. After all, it's the only thing that you actually control in trading. Right. So let's look, I'm sorry about the maths here, but why is it important to control losses? So if you lose 10% of your account and you've 90% left, to get back to your original value, you need to make a further 11% profit. So you're saying, well, wait a minute, if I've only lost 10, why don't I just make 10 back and get to my original value? Well, the answer is you're trying to get from 90 back to 100. And that requires you to make 11%. So this is why big losses are so damaging. It can take a trader a long, long time to recover from big losses. So what do you need to know in order to manage your risk? You need to know your account size and how much leverage you have, how much risk you're willing to take per trade. And given that you know what the risk is you'd like to take per trade, you'll know where your stop loss is. You'll be able to calculate the trade size. You'll be able to estimate your target price where you want to get out, and so on and so forth. Now, I mentioned before that there are free tools available, and with MT4, fortunately, there are loads and loads of what's called risk managers that help you do this function to manage the risk of your trading, or sometimes also referred to as money management. You can also contact me on IX Social if you want any of these tools. So one of the key points about risk management is you've got to control your trade size, and you've got to control the number and size, magnitude of your losses. You've also got to be patient. You've got to wait till the trading opportunity turns up according to your strategy. So you do need to learn to sit on your hands. So We're coming to the sort of closing stages now of the presentation, but trading is a well-traveled road. I mean, you're not the first person to want to learn to trade or want to improve your trading ability. What we do know from lots of research and books and God knows what else, good traders possess discipline, patience, focus, and persistence. As I've said before, we live in the age of information. Perhaps there's too much information. But importantly, you're not taking this journey alone. INFINOX has great resources and support, as well as traders like myself to help you learn. And of course, there's the internet. Some of it's good, some of it's bad, but it's out there. So going forward, the ways to keep yourself on the right road is to avoid using your head. Avoid using, no, you've got to use your head, not your gut feeling. One of the things people forget is that trading is physically demanding. Sitting and staring at screens and maintaining utmost concentration is physically draining. And it's emotionally draining too if you're emotionally involved. So it's important to take breaks and keep hydrated and so on. But it's also important to understand that the human brain isn't perfect. And the way it actually works is often not helpful to traders. We have these things called cognitive biases. Basically, they're biases that have helped us as a race survive. But when it comes to trading, they're not particularly useful. So a strategy and good risk management helps to overcome these innate issues. So the issues that traders often face is overconfidence. The more you win, the more you believe you can't lose. Regret. No one likes taking losses, but unfortunately they are expected. There's information overload. It causes people to get distracted, to leap from one thing to another, to not be consistent. So one of the important things here is to focus your attention on what matters. What matters is your strategy and your risk management. And then the last one is you'll see traders chasing trades or trends. And there's a very famous saying in the markets: trade what you see, not what you hope, because the market's going to do what it's going to do, and you need to know what to do next. So one of the interesting things about trading is that if you make profits little and often, you can use this thing called compounding to grow your profits exponentially. Now, you may or may not know this, but Albert Einstein described compounding as the 8th wonder of the world. He said, "He who understands it earns it." And if you were able to make 0.5% a day, your money would grow like this. So these are months. Let's say you start off with $100. By the end of 1 year, you'd have $365, which is pretty impressive from only making 0.5% a day. And this is why being a consistent trader matters an awful lot over the long term, because of the power of compounding. Now, if you do follow this advice and make profits little and often, then you can see as your balance grows, you'll be able to take money from it for holidays or for a second income. But if you don't follow this approach and you like to trade wild and free, you have no risk management and you're swinging the bat, well, as the Chinese say, you better learn to eat grass. So I don't know whether I have encouraged people that trading is very doable, because as a quick recap, we've discovered that good traders are made, they're not born. So you need a strategy, good risk management, you follow the recipe, you'll be successful. That you need to put the hours in to practice, to become good at your strategy and your risk management, and you'll get there. and that, you know, there's a ton of help out there to help you get started on your trading career. But for some people, as Tiago mentioned at the beginning of this presentation, maybe they just don't have the time available due to other commitments, or maybe, you know, people just aren't confident because they, you know, lack the experience and knowledge. And as you've seen from the earlier part of this presentation, that it's not something that can be learned overnight. So is there another way? Well, there is another way. And in 1965, Sir Isaac Newton said that if I've seen further, it is by standing on the shoulders of the giants. And what he meant there was that the reason why he was able to come up with his various laws of physics, Newtonian laws, was that he was able to leverage the knowledge and research that was available to him from his people who'd gone before him and looked into the issue of gravity and whatnot. And you can still do that today by using the knowledge and experience of skilled traders and IX Social. Now, why is copying a good idea? Because it reduces your learning time. You can see how a trader trades. You can earn while you learn, so your capital is in the markets and making profits while you yourself are learning. Perhaps you've even got a demo account with INFINOX, and you're practicing your own strategy there in order to get ready for the day when you will trade live monies. But perhaps importantly, you'll avoid expensive mistakes and lose a lot of your trading capital. So Tiago has given you a little introduction to IX Social. I do recommend that you go to Google Play or to the Apple downloads and download IX Social onto your phone and take a look. Copy trading is not a new thing. It actually began in 2005 as a way to help people access financial markets and to access financial markets and to earn trading profits, even though they themselves didn't know how to trade or didn't have a strategy, or perhaps, you know, they had absolutely no time to trade at all. And one of the interesting things about copy trading is that you can select several traders. So you don't have to stick to one. You could have 2 or 10 to create your own diversified portfolio of traders. And you can, the way you can choose the traders to trade a portion of your money is in the IX Social app. Traders are ranked and rated, so you can see who's doing well and who's not doing so well. And so if you download the app onto your mobile phone, you can take a look at the traders and see the sort of returns that they're getting. And as I suggested earlier, maybe open a demo account with INFINOX to practice your own strategy, and then put some capital into your copy trading accounts so you can earn some trading profits while you're learning. So we're here at the end, and if there's only one thing you should remember from this presentation, it's this: plan your trade and trade your plan. So I'd like to thank you for your attention. And I'd also like to thank INFINOX for the opportunity to give this presentation. If you'd like to hear further presentations on particular topics, do let me know, or let INFINOX know. We would appreciate your feedback. And you can also find me on IX Social as D Rooney,